As the market continued to dig a deeper hole today, it sold off $20 billion and established a new yearly low. We are now equivalent in total market cap to November 15th, 2017. Interestingly, Bitcoin had nearly the same market dominance then as it does today. What's truly amazing here is that the market is operating on fear based off of nothing, as nothing has happened. For those unaware, the VanEck SolidX ETF proposal was delayed by the SEC yesterday, leading to $30 billion being sold off. The key word there is delayed, not denied. They have delayed other ETF applications as well. Why this one hurts so badly is that the market did a great job of convincing itself that we are going to see an approval in August, despite what the rational voices have been saying. So rather than speculating, let's get empirical and discuss rationally about what is going to happen so we're smarter and less emotional than this clearly oversold market. Welcome to Ready Set Crypto. This is your brain on blockchain. So before we go any further, I think we should first have a common understanding about the different ETF applications on the table currently. First, we have the ProShares ETF. Its first update was January 30th, and its final deadline is August 23rd. Next, we have the Direxion ETF. Its notice was originally posted on January 24th, and the final deadline for the SEC's approval is September 21st. After that, we have the VanEck SolidX ETF. This was filed on July 9th, and we just saw the first extension issued on August 7th. Likely, we'll see the final deadline for this one be in February of 2019. And as a side note, this is the ETF that everybody's talking about. Finally, there's the Bitwise Hold 10 Cryptocurrency Index Fund, which was filed on July 24th, and its first deadline is September 7th. So, if you'll notice the pattern, the timing of the ETF approval process generally follows a standard formula. The ETF in question files a proposed rule change with the SEC. Next, the SEC posts notice of the filing in the Federal Register and solicits comments. This is probably where you heard about the Bitcoin ETF and the public comments and how there's 1,300 of them. After that, the SEC has 45 days from posting to approve or deny the ETF. But the thing to note is that the SEC doesn't have to decide within the 45 days. It can extend the deadline up to 3 times. As we just saw with the VanEck ETF, it would add 45 more days if a longer period is appropriate. The SEC could go on to add 90 more days to consider more fully the application. After that, it will give 60 more days if again a longer period is appropriate. This means the real deadline for the SEC to approve or deny an ETF is 240 days after it files notice in the Federal Register, or 45 plus 45 plus 90 plus 60. Because of how the law works, the SEC can't just set a 240-day deadline as the initial span of time for consideration. It has to do these extensions one at a time. So for example, last month we saw the Direxion ETF given its third and final extension allowed by law. This means we'll likely see another 2 ETFs denied or approved within the coming month. ProShares with its deadline on August 23rd and Direxion with its final deadline as September 21st will be decided by those dates. Now the thing to mention is that these are different animals than the VanEck SolidX ETF. Unlike that ETF, the Direxion and ProShares ETFs are not commodity backed. In other words, these funds won't involve buying actual Bitcoin, instead being based off futures. Hence, they're not expected to have as much impact on Bitcoin's price as the VanEck SolidX Bitcoin ETF. When the Direxion ETF was delayed last month, it barely affected the market. But yesterday's delay of the commodity-backed ETF sent the market into an existential crisis. The market's expectation is that a commodity-backed ETF would significantly impact spot price, while a futures-backed ETF like ProShares or Direxion won't. Still, how the SEC handles futures-backed ETFs could signal what they'll do with the VanEck SolidX Bitcoin ETF. So let's talk about the VanEck SolidX ETF and what most people aren't talking about. After all, the VanEck SolidX ETF the market cares so much about is merely a copy of a previous application that was denied. There was another SolidX ETF proposal that was denied on March 29th, 2017. Now, of course, people are going to respond that this time things are different. This time the ETF proposal has some things going for it that the previous one didn't. Let's cover those things really quickly. First, it's with the SIBO, and the SIBO is respected by the SEC more than someone like the Winklevoss twins. Second, the assets will be insured. That's a big deal. Third, some of the main markets, such as the US, Japan, Korea, and China, have made big steps in clarifying the regulatory situation for Bitcoin and other crypto assets. Fourth, the SIBO doesn't apply for licenses it doesn't expect to obtain. I think it's highly probable that the SIBO held discussions with the SEC before even applying for this. Fifth, they are professional grade custodial services available now, which the ETF will leverage, that were not available last time. And finally, the presence of insurance and custodial services shows how the space is maturing. But with all of that said, the VanEck SolidX ETF, the one currently under review, has exactly the same insurance and exactly the same custodian as the request that was denied in March of 2017, that being SolidX. For all intents and purposes, it is the same proposal with just some amendments to the registration. Specifically, I would point attention towards the SEC letter from January 18th of 2018 that raised a bunch of questions and concerns about Bitcoin and Bitcoin ETFs. And in my opinion, I don't think they did much to address those concerns with this new application. Having read the application itself, I would go so far as to say that it is sloppy and unfinished. There are brackets everywhere, and the OTC index it relies on is unfinished. To prove this, all you have to do is compare the third amendment to the SolidX S1 registration from February 2017, before they got denied in March of 2017, with the fourth amendment from January 2018 and the fifth amendment from June 2018. I'll link them in the description below. And of course, the changes to note are that instead of the NYSE ARCA, they'll now be listed on the SIBO BZX. Additionally, VanEck, which is a major ETF issuer, is a marketing partner, which likely means that VanEck gets some money so SolidX can use VanEck's name on the shares. Furthermore, the amendments have some paragraphs added about regulations in different countries. Everything else considered, I do think this is a good point to bring up, and they also call attention to the fact that the CFTC has allowed Bitcoin futures. Another big thing to mention is that before they would have used a XBX spot price based on exchanges, but now they'll be using the MVIS Bitcoin OTC Index, or MVBTCO. This index doesn't actually exist yet. And finally, just in general, there's more emphasis on the OTC markets. The trust will do most of its trading with the OTC platforms that will be in the MVIS index, but they might also use Bitstamp, GDAX, Gemini, ItBit, Bitflyer, and Kraken too. Now, of course, these concerns could be somewhat alleviated before February of 2019, when I think the final deadline will be. But I think it should be clear that the market is putting far too much faith and hope in this clearly flawed ETF application. Obviously, the biggest change respective to this application over the previous version is that VanEck's name is on it and the SIBO is behind it as well. But in terms of the changes themselves, I don't really think they're very compelling and don't address a lot of the underlying concerns that the SEC may have. Do some digging and you'll find that these aren't the people that we should be entrusting the health of the market with anyways. For example, in August of 2017, Joe Foster, portfolio management and strategist for VanEck, is on the record for saying, Bitcoin and other digital currencies are a fad that has attracted the attention of programmers, speculators, and early adopters. It is my opinion that governments will not allow digital currencies to reach the critical mass needed to challenge the utility of fiat currencies, such as the dollar. Now, I'm sure after the run-up of late 2017, VanEck thinks Bitcoin and other cryptocurrencies are even more of a fad. I ask, are these really the people that deserve to move the market 20 billion in one day? Once again, I need to stress that this ETF is dangerously polluting the mind of the market. and it is much more important that we focus on technology and adoption than the ETF. After all, the news from this weekend regarding Bakkt and their custodial services, fiat to crypto platform, emphasis on crypto in retirement funds, and an emphasis on retail payments is much bigger news than the ETF. And some would say that the things that Bakkt announced makes the ETF less important. But for a moment, let's put on our investigative hats one more time and try to predict what is going to happen over the next couple months. So first question, as their final deadlines are coming up, do either the ProShares or Direxion futures-backed ETFs get approved? After all, if an ETF, even one that is futures-backed and not as significant as a commodity-backed ETF, gets approved, wouldn't that shake up the market a little bit? I think your average investor and trader doesn't even know that there's a difference between the two. Well, as the ProShares filing acknowledges, the market for Bitcoin-tied derivatives is still nascent and early stage. As the firm wrote, Bitcoin futures contracts have only recently been listed for trading and have a very limited trading history. There can be no assurance that an active trading market for Bitcoin futures contracts will develop or be maintained. So I think this is a bit of a toss-up. Bitcoin futures have traded successfully for 8 months, and while they're still not widely used, they are increasing in popularity, as the CME reported their Q2 volume was up 93% over Q1. So I think we could see approval go either way. And with both of them being decided within a month, that sets the stage for more market disappointment if there's back-to-back denials. Again, the market doesn't regard these as highly as the commodity-backed ETF, but let's consider the worst-case scenario. First, ProShares is denied on August 23rd, then Bitwise is denied or delayed on September 7th. After that, Direxion is denied on September 21st, and then the VanEck SolidX ETF is delayed once again or even denied on September 30th. That is a whole lot of FUD. September may be worse than what August currently is. But let's look at the opposite side and try to think positively here. The SEC commissioners responsible for deciding the fate of these Bitcoin ETF applications are currently split 3-1, as we saw with the Winklevoss ETF denial. Hester Pierce, aka Crypto Mom, is clearly pro-ETF, and I think she'll continue to hold to that sentiment. Then we have Alad Rossman, who will most likely succeed Michael Piowar this month. He's on the record saying that the SEC must treat ICOs, blockchain, and other emerging technologies in a fair and transparent manner. He also used to work for ICE and the NYSE, which, as we've seen from the Bakkt launch, is clearly warming up to crypto. In addition, the Democrats have now made their recommendation for the other replacement. The Republican and Democrat candidates will probably be simultaneously approved to keep balance. The Democrats will put forth a progressive, open-minded candidate in Allison Lee. Her enforcement work includes cases against JPMorgan Chase and Credit Suisse related to mortgage-backed securities sold around the time of the 2008 financial crisis. So I don't think it's too much of a stretch of the imagination to think that she'd be pro-Bitcoin. What this boils down to is that these are 2 new chances for a yes vote, both replacing current no votes, and potentially swaying the deciding body from a 3-1 to 2-3 in favor of Bitcoin, as there's currently a vacancy necessitating the 4 votes when there should be 5. So it's very possible that we might see a bloody August and September, but keep your eyes on what's going on in the SEC and how we might see the tides shift in time for the final decision in February. With market movers like Bakkt coming online later this year, it could be a perfect catalyst or the perfect storm. But for today, the market is clearly oversold. We have endured a bear market predicated on fear and uncertainty. We could very well be approaching the capitulation point. So keep your chin up, even through days like today. And that's it for this video. Thank you so much for watching, and please consider subscribing if you haven't done so already in order to continue to see high quality cryptocurrency analysis and advice. And don't forget to hit the bell right next to the subscribe button in order to be notified when we put out a new video. Also be sure to watch some of our other videos and visit our website, where we've got more free cryptocurrency education, a free intro course, a free book, and a free newsletter, so definitely check us out. Thanks again for watching. This has been Ready Set Crypto, and I'll catch you in the next one. Cheers.